Let's take a look at other news making headlines tonight. In the world of business, digital lenders in the country could soon be brought under the ambit of the Central Bank of Kenya. Deputy Governor Sheila M'Mbijjewe says a strategy is already in place to fix huge interest rates charged by the lenders locally. Faizal Ahmed has more on this.
A glance on popular social media sites are enough to paint a picture of what Kenyans think of the online lending applications. Many complaining of how the apps prey on them and charge exorbitant interest rates.
I find it interesting. About November last year, we had a lady come to the central bank to explain to us how her husband had committed suicide following getting involved in one of these lenders. And what this lender had chosen to do is, when her husband was unable to pay the debt, then what the lender did is, through the digital abilities that they have, they extracted the contact list of her husband from his phone and then started sending messages to all the contact list, including his mother, his grandmother, his aunt. This is predatory lending.
M'Mbijjewe says that the CBK was already working on a document to regulate the cost of loans in the country.
Two of those pillars are very specifically about what we're talking about today. Risk-based pricing, so you don't just price in general on individuals. You have to understand who that person is, what their risk is, and give them the best price. And the other is ethical banking. And in this, I made mention to the predatory lending.
According to a research paper presented during last year's Kenya Bankers Association annual conference, some of the more expensive loan apps include Pesa na Pesa, which charges 38% interest rates, Kopa Chapa at 38.8%, Pesa Pata at 30.4%, and Kopa Cash at 15.3%. M'Mbijjewe spoke during the Credit Infrastructure for Sustainable Growth conference happening in Nairobi, where both banks and digital lending applications were faulted for not using credit scores to rate borrowers when it comes to lending.
Data quality, we need to expand, look at multiple sources of data, and also encourage borrowers also to build a good credit history, because that enhances their ability to have enhanced limits for credit and have enhanced pricing, favorable pricing, if I may call it.
The capping of interest rates in 2016 saw the cropping up of digital lending apps that many small businesses used to fill in the gaps left by commercial banks. Dubbed Quickie Loans, digital lenders have hooked up an estimated 2 million Kenyans with the credit reference bureaus for defaulting. This as they continue to raise billions of shillings globally to lend in the country at an uncontrollable rate. Faizal Ahmed, Citizen TV, Nairobi.